in today's 4 p.m. session. The session will be for 45 minutes. I request all of you to be present in today's session, right? I think I have sent you the mail as well as a WhatsApp message. So few students have already registered. I request all of you, those who have taken finance specialization, to be present in today's class. We will be understanding the charting, the technical analysis, the major difference between the technical and the fundamental analysis in today's session. Well, students, in the previous class, we were discussing about the fundamental and technical analysis. Well, by this time, all of you understand that fundamental analysis is basically for an individual who is looking for a long-term investment. An investor basically goes for fundamental analysis, whereas a trader or an individual who is looking to make a profit within short period, so he will go for charting, also called as technical analysis. So this is the basic, right? So long-term investor goes for fundamental analysis, as well as the short-term trader goes for technical analysis. Well, first we'll understand what is today's market, and then we will proceed with the unit. Okay. Well, to all of you, let me brief. Today's market, that is Nifty, is 11,690. You can see here. So 11,687.60, which is a benchmark of Nifty 50, and it is down by 42 points. And Nifty next 50 is 27,251.45. And you can see here to my extreme right, where my cursor is moving, students. Today's top gainers, as an opening, Asian Paints. See, LTP stands for last traded price. I'm repeating once again. Okay? LTP stands for last traded price, which is 2,191.60. So percentage change is 1.48, and the volume is 10,67,630. See, students, why I'm showing you this screen is all of you should be watching this screen to understand the movement of the market, right? And November first week is concerned, there is a very big event which is going to happen. Can anyone tell me what is that? November first week is concerned, there's a very big event which is going to happen where the entire world is watching on that. So what is that event? Which will have a greater influence on Indian equity market also. Can anyone tell me what is that event which the world is seeing now, which is happening in November first week?
The vaccine launcher?
No, my dear Shreyans.
So US elections.
Very good. It is 3rd November. 3rd November is concerned. United States presidential election is there, right? So
yes, sir.
That is a global event. So almost globally, all the equity markets, the secondary markets are concerned. They are actually watching. So normally, when you see past 20 years data, or from 1975, you see the data, post and pre US elections, there will be a volatility in the market. Students, why I am telling you this particular scenario is, when we are considering the fundamental analysis as well as technical analysis, these factors, the global factors, play a very, very important role, right? So November 3rd, that is pre and post, you can see some volatility in the market, some ups and downs in the market. So today also, you can see morning it was down and now it is slowly recovering, right? If you see the charting here, all of you. And today's top losers also, you can see, my dear students, you have L&T, Titan, ONGC, Tata Motors, and Hindustan Unilever, right? So this is about NSE students. And let me show you now the Sensex. Okay, you can see here, 39,838.11, right? So it is down by how much? 84 points, right? And even some of the top gainers also, you can see in the green here, to my extreme right, students. Asian Paints, Ultratech Cement, HCL Tech, ICICI Bank. See, as I move my cursor, you can see here the last traded price, change, TCS is also there, Axis Bank is there. See, there is a company which is just dial. They have moved drastically very nicely. All of you can see here my screen. I'll be just dial. See, today it is up by almost, yeah, can you see here? 709.50. That means today it is up by 32 rupee, right? So if morning someone has taken a position at 664, today's opening, so you would have gained, almost 32 rupee per share. And there is one more company, students, which has gone up today. I want to bring to all of you, that is Route Mobile Limited. ROUTE, Route Mobile Limited. Yesterday also this particular stock was moving up, and today also you can see here Route Mobile Limited. All of you can see here to my extreme, to my cursor here, it is per share 966.20, and it is up by how much? 53.60 already. So it's now 10:12 a.m. So the stock is up by 53 rupee per share. That means you would have gained, if you would have taken a position in the opening or in the earlier session, per share you would have got 53 rupee profit. That means if you would have accumulated 100 shares, so 53 multiplied by 100 is how much? 5,300, like that. Okay. Now, this was about the market opening, today's opening. Now we will come to the session. I think few more students are joining. You should be on time. For the latecomers, I'm telling. Okay. For all the students who joined late, I request all of you to attend today's session at 4 p.m. We will be briefing about the technical analysis, the essence or the importance of technical analysis. So wherein we will be explaining the trends, the upward trend, the downward trend, and the sideways. So when to take a position and when to exit from that particular position. We will even understand in today's session the support and the resistance for a particular company or for a particular index. Now, today's session is concerned, students. In the previous class, we were discussing about the EIC framework, that is economy, industry, and company, right? Let me maximize the screen. So can anyone tell me, am I audible to you? Is the screen visible to you?
Yes, sir.
Okay, perfect. So with a lot of energy, we will start today's session. So EIC framework, as I discussed to all of you, fundamental analysts use a three-tier approach. This is called as a three-tier approach to analyze earnings prospects of a firm. That is to determine the expected dividends and estimate future prices. They recognize that the performance of a firm depends on its own efforts, as well as the characteristics, the structure, and the performance of the industry to which it belongs, and the general macroeconomic conditions. So this particular strategy or the framework is known as economy, industry, and company approach. So first, I think, we have understood about the concept of, the fundamental analysis. So fundamental analysts, as I mentioned to all of you earlier, they assess the fair market value of an equity share by examining the assets, earning prospects, the cash flow projections, and dividend potential, right? So the fundamental analysts differ from technical analysts who essentially rely on the price and volume trends and other market indicators to identify the trading opportunities. So basically, it refers to an examination of the intrinsic worth of the company. And very important, students, see, fundamental analysis is the process of looking at a business at the basic or at the fundamental financial level, right? See, many of the investors, especially the long-term players in the market, they use fundamental analysis alone or in the combination with other tools to evaluate stocks for investment purposes. The goal is to determine the current worth and, more importantly, how the market values the stock. So fundamental analysis has a logical progression from the general to the specific, which you had discussed in the earlier class also. Then even objectives of fundamental analysis, let me do a quick revision for all of you, those who are here. See, to conduct a company, what is the object? Why do fundamental analysis is required? Because we can easily identify the stocks which will become multi-baggers, or the stocks which will give a beautiful returns over the couple of years. If I'm holding that particular stock for a couple of years, it should deliver me the beautiful or the fantastic returns, right? So what are the objectives of a fundamental analysis, students? See, fundamental analysis is basically performed on historical and present data, but with the goal of making financial forecast. Some of the objectives are like to conduct a company stock valuation and predict its probable price evolution, to make a projection on its business performance, to evaluate its management and make internal business decisions, to calculate its credit risk, and to screen and categorize stocks and other financial assets in terms of investment quality and expected return. Then what are the strengths of fundamental analysis? One, what we discussed on the previous class, hidden gems. So I even showed you with the example, right? See, one more example also I want to show you. Hidden gems. What do you mean by hidden gems? Let me show you hidden gems now. In 2008, let me take. All of you can see the company, right? It is Bosch Limited. See here, when I do a thorough fundamental analysis, students, in the year 2002, let me start from here. Let me see, all of you observe this graph here. I have plotted, I have searched for Bosch Limited. The symbol is NSE BOSH Ltd, that is Bosch Limited. The current market price is 11,719 as on today, that is 29th October. But what or how this fundamental analysis help us to identify that Bosch will grow like a multi-bagger, right? See, in 2002, you can see that, students, 15 November 2001, it was somewhere around 216 rupee per share, Indian rupee. INR means Indian rupee, okay? So if someone had accumulated, seeing the fundamental analysis point of view, because since I'm an investor, so I always go for fundamental analysis, and I am expecting the result for the next 10 years. My holding period will be 10 years, imagine, okay? So 2002, it slowly started here, and in 2008 it came to 3,753 per share. Then again in 2014, 8,973 per share, right? See, the company is fundamentally very strong. So what I'm explaining you is the strength of fundamental analysis is we can identify such hidden gems in the market. See here, it went to 25,570, that is in 1st April 2015. 1st April 2015, it went to 25,570 per equity share. Right? Then after that, now presently, it is trading at 11,719 per share. Right? So this is how we can easily identify the hidden gems in the market when we do a thorough fundamental analysis. Then the second strength what we discussed was long-term trends. See, fundamental analysis is also useful for identifying the long-term trends in the market, students, including the multi-year and the multi-decade trends. Then we can easily identify the company which have got a solid foundation. That means when I say a solid foundation, this type of analysis is reliant on the thorough understanding of the business and the business model. So therefore, providing a solid foundation for calculating the value, right? And then the fourth, objective, or the fourth strength of fundamental analysis is it also helps in understanding the underlying business and business models of a particular organization. Then finally, we even studied about the EIC framework. That is macroeconomic analysis, industry analysis, and company analysis. So these were the concepts which we discussed thoroughly in the earlier class. Now today we will discuss about the industry analysis. See, industrial analysis makes an attempt gaining insights into the key sectors of economy that influence industries in particular, and the relative strengths and weakness of a particular industry. Now students, what do you mean by industry analysis when it comes to equity market is how exactly a particular sector will be performing over the next 5 years. So suppose one minute, if I feel that Indian economy will outperform, or Indian GDP is concerned will do fantastic in the next 10 years, then first thing what I have to do is I have to list down the industries, I have to list down the sectors which will actually do very nicely in the next 10 years, right? So say for example automobile sector is concerned. So first thing is what I am doing here, I am just chalking down the sectors which we feel that which will outperform in the next 10 years. First thing is industry analysis, students. Okay, in that I need to identify some of the stocks. Like when it comes to automobile, we have Tata Motors, and then we have Eicher Motors, right? These are all the listed companies, right? So like this, first what we'll do is, first we'll do a thorough industry analysis. That means the key sectors of the economy. Remember, I'm repeating the word, the key sectors of the economy that influence the industries in particular, and the relative strengths and weakness of a particular industry. So the information developed from economic analysis and forecasts will help the analyst to visualize in specific the growth patterns and opportunities of various industry. Now, when it comes to industry classification, all of you must remember, so classification of industries can be done, based on, business cycle, based on industry groups, and based on input-based industries. Now, when we study the classification of industry based on business cycle, see the general classification in this framework is cyclical industries and defensive industries and cyclical growth industries. See, growth industries are characterized by high rates of earnings expansion. See, often independent of business cycle, these industries are pioneers of a major change in the state of the art. See, for example, communications equipment in electronic industry. See, the first one, when it comes to classification by business cycle, we'll understand the cyclical industries. See, cyclical industries are closely related to business cycle. Prosperity provides consumer purchasing power and boom to industry, whereas depression adversely affects them. See, consumer durable are subject to this kind of changes. Then we have defensive industries. See, defensive industries are those that the products which have relatively inelastic demand. For example, students, food processing industry, right? Then we have cyclical growth industries. See, cyclical growth industries are those which are influenced greatly by technical and economic changes. For example, airline industry. So what we are studying now, students, we are studying the industry classification. So in that we are studying the classification by business cycle, right? Then we have industry life cycle, students. And even, one more thing is, in case of industry classification, we have industry groups also, like small scale industries we have, then medium scale industries we have, then large scale industries we have, classification based on the size of the industries. small scale industries are not listed, and those which are listed should be a minimum paid up capital of how much? 30 lakh, right? So those with 30 lakh and above are eligible to be listed on the exchanges. Then similarly, medium scale industries, they should have a paid up capital of 5 crores and above. Then large scale industries, the industries units with the paid up capital of 10 crores and above can be listed on both the exchanges. Then we have input based industries classification, students, that is chemical based products or agro based products. Then we have forest based products, then metal based products and marine based products, right? So then the second one is called industry life cycle. What you can see in the slide over there, the industry life cycle. So all of you have studied, right? The introduction phase, the growth, the maturity and the decline, right? So every industry will be having its own life cycle. So what do you mean by pioneering or the industry or introduction stage in case of industry life cycle? So this stage is characterized by introduction of a new product and an uptrend in business cycle, which encourages new product introduction. See what happens in introduction phase, students? Demand keeps on growing at an increasing rate, correct? So competition is generated by the entry of new firms to grab the market opportunities. Then weaker firms face premature death, while the stronger over survive to grow and expand. Then we have expansion or growth stage. See, this is characterized by the activity of firms surviving from the recovery stage. After overcoming the teething problems, the firms continue to improve financially, right, and competitively. The market continues to grow, but slowly offering steady and slow growth to sales of the industry. So it is a phase of consolidation wherein companies establish durable policies relating to dividends and investment. Then we have the stagnation, also called as maturity stage. See, this stage shows sign of slow progress and also prospects of the decay. The stagnation in economy and the pedestrian nature of the product call for innovative strategies to begin a new life cycle, right? Then finally, the fourth stage in industry life cycle is called the decay, or we can even call it as decline stage. See, industry reaches this stage when it fails to detect the death signals and implement proactively or reactively appropriate strategies, which we can take an example of BSNL, students. All of you know, one time it was a market leader in the telecom industry, a public sector unit. But today, see what has happened? Because since they have not implemented the creative or the innovative products, and they retained some of the employees, so due to which they did not do the proper cost cutting over there in BSNL. So now the industry has reached a failure stage and it fails, right? So these are the four stages of industry life cycle. Then finally, we have the tools and techniques of industry forecasting. This is very, very important, students. The tools and techniques for analyzing the information about the industry within a time framework will be explained now. The first one is market profile. The second one is called cumulative methods. And the third one is called time series. We will understand each one in detail. First, we will take market profile. See, a market profile consists of those endogenous characteristics which have a significant bearing on demand or the way in which it can be developed. See, the basic elements of it are number of establishment, then very important is, students, geographical location of establishment, the number of employees, then value of sales, correct? So value added by manufacturing, then capital expenditures, right? So this is about the market profile. Then the second one is called cumulative methods. See, these are based either on market surveys or statistical measurements. Surveys are carried out by research agencies, so consultants, industry association and research bureau, in order to predict the future demand and proposed investment and thereby identify the expansion prospects. Then we have the last one that is called as time series. See, in time series, we have trend, cycle, season and erratic events. See, when I say trend, TREND, trend. It is a result of the basic development in population, the capital formation, and technology. So it is found by fitting a straight or a curved line through past sales. Then we have cycle. So it captures the wave-like movement of sales. So many sales are affected by swings in general economic activity, which tends to be somewhat periodic. Then we have season. See, it refers to a consistent pattern of sales movement within the year. The term season describes any recurrent sales pattern. The seasonal component may be related to weather, factors, holidays, and trade customs, etc. Then we have erratic events. Though when I say erratic events, we experienced it recently. That is, the COVID-19 is concerned. See, it refers to the unpredictable sales caused by some of the unforeseen events like COVID-19, what we experience now very recently. Then we have strikes or the riots, then war scares, which is again a happening factor, and other disturbances. So this was about the industry classification, the industry life cycle, and tools and techniques of industry forecasting. If you ask me, students, I have a question to all of you, like which one is better, technical analysis or fundamental analysis? You tell from your point of view. I will show you the returns now.
Sir, both, sir.
Both. Why, Vishal? Why you feel both? Please justify, that's all. No,
Sir,
justify.
Because the technical analysis helps us to see the trends in a short-term way. Trends, and the fundamental analysis which helps for the long terms. We'll see the fundamental analysis. We can see the way, how much company will grow. We can predict. So
okay, very good. So technical, Vishal is telling, sir, both are very important, sir. We need to consider even technical analysis as well as fundamental analysis. Okay. Any other student, or shall I show you the result? So Vishal, yeah, Shweta, you want to speak? Technical for intraday trade, Vinit was. Okay, perfect. Fundamental for long term. Okay. But what I'm asking you is, if you are my advisor, or if you become my individual financial advisor, so if I come to you with 1 crore, I have 1 crore with you, then what would you ask me first? Prashant?
Yes, sir.
If I approach you, Prashant, if I approach you telling that I have 1 crore rupee, so what is
Yes,
your
sir.
first advice for me?
Long-term investment, sir.
Okay, now very good. Now let me when you start actually working as a financial analyst, or as a portfolio manager, or as a fund manager, or as a risk manager, or as a treasury manager, or in any finance company, or in any bank, the first question you will be asking to the to a guy is, some of the basic questions are there, right? Sir, what is your expected returns? Sir, what is your risk expectation, sir? Whether you are ready to take risk, sir, and if you are ready, whether you are ready to take how much percentage of risk. The third thing is, sir, how about your tax part? You need to ask and interact with them and collect the input, right? All of you. Then only you can design a portfolio for him, right? So this is one of the most emerging sector, that is called as financial services. So when any client approaches to you, or when any individual approaches to you, or your dad or mom approaches to you, since they think that you're already done with your MBA, so you have any knowledge about this financial instruments. So first question is, you need to see how much risk they are in a position to take. So how much returns they're expecting, and what should be their holding period. Right. So if any age-old person of 80 years, he comes to you and he will tell, see, my boy, I have 1 crore rupee. I'll be giving to you. I want in next 1 year, I expect 15% returns. So you cannot put that complete 1 crore in equity market, right? Because of his age factor. So you have to design the portfolio based on the investors risk, return, liquidity, tax part. So all these parameters you need to consider, right? Normally for a young guy, say for example from 25 to 35 or maximum 40, who is in a position to take risk, who can wait for the next 1 decade, that is 10 years, you can suggest him to be his portfolio to be 60% in equity directly and other instruments. But normally a age old person who has crossed 50 or 60, so you cannot tell him an aggressive portfolio which consists of a lot of equity related instruments, right? So you can consider the age factor also. That is very, very important, right? Now, many believe that, sir, intraday is better. We get good returns in intraday, sir, because we plot the charting and every day we can make a profit of 10 to 15%, sir. Yeah, people are there who make profit in intraday, but the research or the experienced people, or including Warren Buffett, has proved that consistent, please remember, consistent investment in the quality stocks over a period of more than 10 years has delivered the returns which has beaten the intraday returns. See, there's a company called this company. Wait, let me open. There's a company in India which purely construct the portfolio on the basis of fundamental analysis. All of you can see the screen? Shreyans, what is the name of the company here? Purnartha, right?
Purna.
Yeah, Purnartha. This company works, kindly mute your audio. Okay. This company purely works on fundamental analysis. You can see the returns. You will be shocked to see the returns now. Their performance. It's a SEBI registered firm, right? So you can see here, it's a SEBI registered firm. Now let me show their performance, how they have delivered the returns. Okay. See, whenever you are studying, you need to compare with the benchmark. So this is Purnartha's return and this is Nifty return. So when I say Nifty, you can see here. Yeah, performance. All of you can see best benchmark, create wealth. Always remember, students, a fundamental analysis helps you to create wealth. See, rupee 1 crore invested with the Purnartha, who believes in only fundamental analysis. Rupees 1 crore invested with Purnartha in April 2009 became 41 crore versus 3.72 crore with Nifty in September 2020. This is there on the paper, right? It's a SEBI registered firm. You can see the returns here. 1 crore invested with Purnartha in April 2009, which believes in completely fundamental analysis, became 41 crore. That is over a period of how many? One decade. That is 10 years. You just imagine the appreciation what they have made when it comes to fundamental analysis. See here, they have even showed us financial year 2009-10. So Q1, Q2, Q3, Q4 and annual. See the percentage return, students, what they have given, 141%. They have even given negative returns in 2015-16, that is -8% also. But overall, if you consider their CAGR, that is compounded annual growth rate, is more than 30%. See? Right? So we have companies in India who works primarily on the fundamental analysis and delivers beautiful returns to the investors. So for that, what you have to do is, students, first you should be knowledgeable in this particular domain, and then slowly start advising your friends or your family also. Okay. Then we will study the company analysis. Now, what do you mean by company analysis? So analysis of company consists of measuring its performance and ascertaining the cause of this performance. When some companies have done well, irrespective of economic or industry failure, this implies that there are certain unique characteristics for this company that had made it a success. The identification of these characteristics, whether qualitative and quantitative, is referred to as company analysis. So what do you mean by qualitative and quantitative, students? So first we'll understand quantitative indicators of company analysis are the financial and the operational indicators of the company, right? Whereas qualitative factors influence investment decisions to a large extent. So qualitative factors are the management reputation, name of the company, operational plans of the company for the future, and so on. See, in the case of company analysis, the balance sheet data should be first analyzed for the efficient use of capital, the leverage enjoyed in the use of capital, then the return on net worth and return on equity. Then very important, students, two components of company analysis we'll understand now, that is called as financial indicators and non-financial indicators. Now, what do you mean by financial indicators? All of you have studied in your finance subjects, FM and all. See, financial indicators are those which can be used to analyze the financial position of the company. The most important financial indicators used in the company are financial statement analysis and ratio analysis. Right? See, the financial statements are a primary internal source of information for evaluating the investment prospects of various companies. So financial analysts interested in making investments in equity shares of a company will be concerned with the prospects of rise in value of the firm. The asset value of a security is determined by estimating the liquidating value of the firm, deducting the claims of the firm's creditors, and allocating the remaining net asset value of the firm over the outstanding shares of the stock. See, some of the factors what we need to consider is the income statement, the balance sheet, then statement of cash flows. Then very important is cash flow from investing activities, cash flow from financing activities. Then ratio analysis plays a very important role, right, when it comes to fundamental analysis, company analysis. So what they are, they're the financial indicators. They show the health of a company, right? So in ratio analysis, we have profitability ratios. That is, we need to calculate the ROI, then net profit margin, then return on equity, then earning per share. So how do you calculate earning per share? That is profit after tax minus the preferred dividends divided by the number of outstanding equity shares present in the secondary market. Then we have dividend payout ratio. That is again a very, very important indicator. So how do you calculate the dividend payout ratio? That is earning per share divided by dividends per share, right? Then we have the second ratio that's called leverage ratio. So leverage ratio helps in assessing the financial risk of a firm, right? Then we have ROE analysis, that is return on equity, that can be analyzed in terms of profitability, turnover, and leverage as follows. Like ROE, that is return on equity, is equal to net profit margin multiplied by the total assets turnover ratio multiplied by the total assets to net worth, which you all have studied in the earlier subjects. Then we have the non-financial indicators. What we are studying now, students, we are understanding the components of company analysis, right? The first one was financial indicators, which will using these financial indicators, we will understand the health of the organization or health of the company, whether the company is year on year, it is performing good or not good, right? Then we have now non-financial indicators like business of the company or the top management are concerned, the quality of the top management, the team, particularly the competence and the commitment of the chief executive officer. And sometimes, students, even I have seen some of the fundamental analysts will actually study the top management. That means how much they will involve in the business or how much they will actually involve in the day-to-day activity of the organization. So whether they're really interested in the growth of the organization, So whether they're really interested in taking care of the employees and the stakeholders, that also really matters. That really matters. Then we have the third non-financial indicator like product range. Then very important, the fourth one is called diversification. Please remember, students, diversification means, you know what, whether the business is diversified, because if something goes wrong with one particular sector, the complete company might come down, might fall, right? So diversification is one important factor when it comes to non-financial indicator. Then we have any foreign collaboration that the company has got. So when a company has entered into a technical collaboration with a foreign company, the investor must find out more about the nature of the collaboration and agreement. That is very, very important. And availability of the cost of inputs. Then R&D, which is very important in present scenario is concerned, whether the company is involved in innovation, right? Whether the company is inventing something new so that it can attract the market share. Then the governmental regulations are concerned. That means the investor must assess the implications of government regulations, such as MRTP Act or FERA Act for the company under review. Then very, very, very important when it comes to non-financial indicator, what a fundamental analyst will be studying is the pattern of shareholding and listing. See, the pattern of shareholding has a bearing on the floating stock available in the market, and the trading volume of these issues will have an effect on the company. Hence, it will be analyzed by the investor before taking any investment decision, right? So this is about the company analysis. So after thoroughly understanding all these concepts, then we'll go to the technical analysis, and we will touch the technical analysis because we'll not go further. So technical analysis means what, students? So technical analysis attempts to explain and forecast the changes in the security prices by studying only the market data. In other words, a study of the past share prices behavior to predict the future trend is termed as technical analysis, right? See, technical analysis broadly the concept is concerned, we can predict the timing of investment, the decision whether to buy, sell or hold. Then even we can using this technical analysis, we can study the market sentiment, whether it is bullish or bearish or sideways. Then even we can understand using the technical analysis the liquidity in the market, then the volume turnover, then even we can understand the price trend in the market also. So the spirit of technical analysis is reflected, the market price reflects not only on the differing fears and guesses and moods, that is the rational and the rational of hundreds of potential buyers and sellers, as well as their needs and their resources in total factor, which defy analysis and for which no statistics are obtainable. So technical analysis is a means of examining and predicting the price movements in the financial markets by using, please underline that, historical price, charts and market statistics. It is based on the idea that if a trader can identify the previous market patterns, they can form a fairly accurate prediction of the future price trajectories. So what are the inputs for this technical analysis, students? We will be using the historical data. So based on that, we can predict the price movement, okay, of a particular stock or of a index. Now, first thing what we have to understand when it comes to technical analysis is there are few assumptions for this technical analysis. So what are these assumptions? We'll try to understand that. See, what they say is a technical analyst believes that market always follows a pattern. Now, when I say a pattern, there are, it can be an upward pattern or a downward pattern or a sideways pattern, right? Now, let me explain you. All of you, please see this particular graph. Let me go to live charting and explain you. Okay. Now don't worry about any other thing, students. Just see the graph here. Because just I'm explaining you the assumptions of technical analysis. See, market follows a pattern, either upward or downward or sideways. See, what has happened with this particular stock that is called as Root Mobile. You can see here in a y-axis there is the price of a stock, right? So this red indicates bears and green indicates bulls, right? See, every time you can see here 821.67, and next it has touched here, that is 900.39, and again we have a small candle here, that is 934.12, and if there is a small candle, see this is called as Japanese candlesticks. What I'm explaining is the trend. See here, if you draw a trend line, is an upward trend here, right? So if you would have taken your position somewhere here or here, so the stock would have moved to the next level, and then it would have touched here. And if you can see here, the small candle which has been formed, okay? Small candle that indicates that bears are slowly coming in the market. The selling pressure is happening in the market at this price. So when there is a red formation here, the red candle formation, so automatically what happens, students? From here, you can see a downward trend. Very simple. Let me use this. So all of you can see the trend here. So you can see, right, upward trend is there, upward trend. The stock has moved in the upward direction. This Root Mobile is concerned. And similarly from this point, see here, you can see there, right? A downward trend is there. A formation of a red candle indicates that the bears are coming in the market for this particular stock. So the selling pressure was more. So here what happened? The stock declined or it came down. And this was called as, see, you can see here, sideways. And from here, it came till here, that is 709. And there was a small red candle and a green candle. And slowly again the bulls came, and it again went to the new height. See here, again from this point. Till here. So the assumption of technical analysis is what? Market always follow a pattern. That is what I want to explain. Don't worry about the graph here. I will explain you the candlestick later. Okay. Just what you understood now, it follows a pattern. That's all. See here, a pattern. Right? All of you understood? Don't worry about the graph, but just understand the assumption of technical analysis. Always market follows a pattern. Then market price is determined by the forces of demand and supply. Very important, students. Now, why a particular stock will go up and why a particular stock will come down? It is purely based on the demand and supply, right? That is the number of buyers and number of sellers. So if a demand for a particular stock increases, the number of buyers also will come for a particular stock. If the number of buyers are more, then what happens? More and more bulls will come, then the market price will go up. And in a similar way, if there are more number of sellers for a particular stock, that means demand decreases. And if the demand decreases, more number of bidders will come for a particular stock and the stock price will come down. And then the third assumption is market discounts everything. The fourth one is post prices help in predicting the future price. Correct? Since we are considering the historical prices. Then the price movements are supported by trade value. So these are some of the assumptions of technical analysis. Then fundamental principles of technical analysis. The fundamental principles of technical analysis are like, discounting mechanism of the market. Then price move in trends, as I explained or just showed to you. Price always move in trends, right? So trend analysis is a vital in technical analysis. It provides the overall direction of the market prices. Then the third fundamental principle of technical analysis is history tends to repeat itself. This is very important. Then the fourth fundamental principle is emotion is one of the most powerful force in the market. Then market has a structure in itself. Then the last one is, the multiple time frame exists in the market simultaneously, right? And then finally, the price, volume, and the time are the key data for analysis. Remember this, whenever you are doing technical analysis, the price, volume, and time are the key data for analysis. Then, which are the factors that are being considered in technical analysis? See, we have price, time, volume, and the breadth of the market. We call breadth of the market. The quality of the price change is measured by studying whether a change in trend spreads across most sectors and industries or is concentrated in few scripts. So study of the breadth of the market indicates the extent to which price changes have taken place in the market in accordance with the certain overall trend. Now, we'll understand the technical versus fundamental analysis and we will stop the session here. See, technical analysis is always for short term, whereas the fundamental analysis is for long term in nature. Okay, that is the first thing. The second would be the technical analyst believes in making a quick buck, that is a quick money making policy, whereas the fundamental analyst, he adopts a buy and hold policy. He does not usually expect any significant increase in the value of his investment in less than a year. Then type of gain, that is the technical analysis, it does not distinguish between the current income and the capital gain. And we call it as a short-term capital gain within a 1 year if you sell the security. Whereas in case of investment or a fundamental analysis, he considered total gain from equity investment. We call it as long-term capital gain, right? And the technical analysis is study of stock exchange information. He forecasts the security prices by studying the patterns of supply and demand for the securities. Whereas the fundamental analysis, what he'll do, he forecasts the stock prices on the basis of economic, industry, and company statistics. What you have to remember here is EIC. The principal decision variable take the form of earning and dividend. So he makes a judgment of the stock value with the risk return. Then the last difference, what we can say is the technical analyst, he uses many charts like line chart, bar chart, point and figure chart, or Japanese candlestick. Okay, besides some quantitative tools. Whereas fundamental analysis, what he'll do is he uses tools of financial analysis and statistical forecasting technique. So this is one of the basic difference between the fundamental analysis and technical analysis. So what we'll do, we'll end the session here, and the next class we will take the theories of technical analysis like Dow theory and Elliott wave theory. But once again, I'm repeating students, all these chart techniques. So today at 4 p.m. we will be studying the trend line, that is upward trend line, how to identify. That is very important. It's an art, what we say. Not all the technical analysts are, they can give a solid buy call. So one who identify in the market and enters at the right time and exits at the right time, only he will make more money in the market. So in the evening class today, we will be understanding the trend line, and we will be even understanding some of the charts, basic charts are concerned. Okay. So I'll again meet you in the evening at 4 p.m. students, so that we'll be discussing with a lot of charts.